Hi, everyone, and welcome to the Amber Data Derivatives Podcast. I'm here with Alex Ryvkin, who is the founder of Rho Protocol. Rho is the first decentralized rates market DEX, and I'm curious to see what that means, Alex. So please let us know. And Alex, how are you?
Good, man. Thanks for having me. Thanks for the introduction. So I can quickly touch on what it actually means, right? So everybody knows what DEX is. I think everybody by now is familiar with derivatives DEXs, the one that everybody, probably most of the people who are watching your podcast have some experience with per DEXs, be that DYDX or Hyperliquid or Vertex. I know that the founder of Vertex was on the podcast recently. So that's a derivatives DEX. So as I'm sure a lot of people know, there are plenty of types of derivatives. So perpetual futures and swaps is one. There are also futures that I'm somehow sure we're going to touch on this podcast. There are options. There's a bunch of other things. Pretty much in TradFi, anything can be traded, right? Anything can be made into an asset. So actually, the largest, kind of the best kept secret in TradFi, the best kept probably from retail investor, is the rates markets. And it happens so that the interest rate derivatives happen to be the single largest asset class in the world in terms of the outstanding interest, or funny numbers for outstanding interest, like hundreds of trillions of dollars, literally. So what we're doing, we're bringing interest rate derivatives on chain. So we enable non-custodial trading of crypto native interest rates. Things we're most interested in, and what we started with, is perpetual future funding rates. And we're also very interested in everything that goes around staking. We think staking is basically the closest to get to a risk-free rate in crypto, and I'm happy to talk more about it. But basically, per funding rates, staking rates, you can also go into borrow land, you can go into a lot of other things. So anything that looks like a rate can be traded on Rho.
That's fantastic. Well, I'm very excited to dig into this. My first prop trading job was trading treasury futures, cash treasuries versus treasury futures, trading that basis. So the Rho protocol reminds me a lot of this type of trade. And to your point, yeah, when we think about the markets, a lot of people think about the stock market. The stock market's something like, I don't know, $80 trillion, but the credit market is 5 to 10 times as big. And so the credit market is the rates market. So it's very interesting to see that in crypto. Maybe before we jump into the Rho protocol details and some of the trade ideas that you've shared with me before, how did you find yourself to this place? Or like, what was your background? Was your background in finance, or how did you find yourself becoming the founder of Rho?
Yeah, exactly. So I started back in the day actually in equities and sales trading, and slowly progressed to the derivative structuring job. Basically, I worked for one of the largest Swiss brokers in the space, for example, structuring very custom derivative products for private bankers, for corporate treasuries, basically to manage risks, to profit from very specific situations. So we looked at every asset class and every issuer out there and constructed some interesting products with interesting payouts. And then I kind of left finance and went into fintech and crypto. Eventually, it was always around decentralization or disintermediation of finance. And my last thing that I did before actually starting Rho was running product and technology for Copper. I'm sure some of the people will be familiar, but basically one of the largest infrastructure providers, custodians, clearers in the space. And when I started thinking, sometime towards the second half of 22, when I started thinking what's there left to do in the space. So my assessment was that basically the likes of Copper and all of our partners in the space, what we've been doing for the past 3-4 years is building infrastructure for professional investors to be able to access the asset class, right? And we were talking about trading crypto, we were talking about tokenized securities, or now we're talking about real world assets, basically the other name for the same thing. And it was very clear that a lot of people in TradFi are interested, but they lack the necessary infrastructure. So there is no custody, there is no trading infrastructure, there's no OMS, there is no portfolio management, there's like none of those basic things, let alone prime brokerage. And at the time, I was looking at it and thinking, like, I think that problem is more or less solved. And between, the Coppers and Fireblocks of this world, or like Hidden Roads and other guys on the infrastructure side, and, Talos and everybody else out there, that problem is solved. And the question is basically, once these guys are there, what would they be interested in? and what is still missing from the types of the trades that they do in TradFi. What is still missing? So we have spot, we have futures, we had options, and my kind of original initial thinking was maybe I should try and go into the options side of things because that's kind of familiar. But I think a few people tried in the previous cycle, and I had some ideas why I don't think it was particularly successful. And one of the kind of the remaining cornerstone components, which was still not there, was rates. And at the time when we were talking to people at like mid 22, when I was evaluating that idea, people thought we were a bit nuts and that it's way too early for the space and so on and so forth. Now the situation is like vastly different. So everybody now understands perp funding. Over the past 6 months, over Christmas and so on and so forth, everybody either made a killing collecting basis or got completely smashed if they were on the long side of the perp trade, for example, and they suddenly found that, like the hurdle rate for their annual return is like 50% overnight, or the cost of their hedge or something like that. And staking became a way better understood thing, both in crypto native world and the people who are like dipping their toe from the TradFi side. It's kind of table stakes now. Now everybody suddenly cares where the collateral is and who is getting the staking rewards and is it getting staked and what's then looking like this. So suddenly everybody cares about rates. I don't think the ecosystem quite figured out how to trade them, right? And how traditional products based on crypto native rates could potentially fit into their strategies. But we got quite a few ideas on that, and that's kind of part of what we're doing is trying to talk about how these things could actually work and provide a market for them.
Yeah, that's fantastic. So there's a few things in there that I found really interesting. So real quick on options, the name Rho Protocol sticks out to me a lot because Rho is the Greek with for the option price with respect to interest rate sensitivity. That's a very nice name. I like it a lot. So
may not be coincidence.
So you mentioned, obviously the basis is something that's very interesting. So the basis is typically used. The trade is typically put on using futures, and then crypto essentially brought the perp to the world. And so the perp has sort of this variable funding rate that isn't as predictable. And that's really where some of the trades that you showed me make a lot of sense. So maybe you could just kind of describe the types of trades that users can put on using the Rho protocol.
Sure thing. So I'm going to use let's make a couple of examples with the products which are currently available on the market. Just as a soft skill, we launched a private beta about 2 weeks ago. Our testnet is now public, and on the mainnet, we got a set of products which are available to our first 100 traders. And we might still have a few spots for those interested. So if anybody finds anything I'm going to tell now interesting, please feel free to reach out. So basically, a couple of things. You mentioned basis, right? The simplest thing, as you said, perp funding rates are very volatile, and basis is probably the most popular trade in crypto, and everybody's doing that. Mostly professional. Then some less professional traders started figuring that out, and then come the likes of Athena, who are basically tokenizing a basis trade. And now everybody's kind of doing basis, everybody's collecting basis. It's super interesting to see how that affected the structure of the market and the structure of the rates, actually. And the problem with that is obviously the rate suddenly spikes to 30% and then drops down to 10% or sometimes even goes negative. Like if you're running something like an Athena, when the yield you're providing to your client, who you're collecting yourself, is a combination of the staking rate and the funding rate. Then at least for a short period of time, you might actually even get into the negative territory, right? Because the staking rate can be actually lower than the inverted basis when the rates on the perps go negative, which is a risk. And as a trader, you get a couple of options. You can either just kind of swallow it and that affects your P&L, but maybe that's sufficient, or you can get in and out of the position, try to predict the rate, but basically it can get quite heavy operationally and computationally, if you will. So what you can do with us is basically trade what most resembles a fixed for float interest rate swap, although it's more of a future. We call it interest rate futures really rather than a swap because it's on exchange standardized with monthly and quarterly expires. So you could, for example, do your normal per basis trade, and then you might want to swap your floating basis essentially for the fixed basis, right? So you can swap your floating rate you're receiving as somebody who is short perp on Binance for a fixed rate on Rho. And on the other side of the trade could be somebody who actually happens to be long perps, and they are natively payer of the same rate, and they also might be interested to have it fixed. Or it could be market maker who is basically quoting you the spread based on their models. And that's the most basic thing. So swapping your floating basis for the fixed basis is, I guess, one of the most straightforward applications.
Yeah, that's fantastic. So if I kind of take this outside of crypto, a great analogy in my mind is, I buy a house, I can get a fixed rate mortgage and I know what my payments are, or I can take a floating rate mortgage and there's some risk that rates go higher against me, but there's also the benefit that they go lower in my favor. And so, if someone's trading essentially buying the floating and selling the fixed, or selling the fixed, buying the floating, shouldn't those just be equal in the long term? Like, where does the trading opportunity come from, and how does someone make money? Is it like a mispricing, or is it the dynamics of the markets change in intra trade?
I think it's a bit of both. It's not a perfectly efficient market just yet. And if you can, right now, again, we're early in the journey, and you can potentially arb some lower rates against the things happening on centralized exchanges. You can play around with it quite a bit. So I think there are still quite a few inefficiencies in the rate space specifically. I think basically the rates market is way less efficient in crypto than, let's say, spot prices, right? Because way fewer people trade those. In the long run, you're absolutely right. So typically, when we look at the target profile of our client, if we're looking at someone who is basically using it purely for hedging purposes, so if it's a very short-term exposure to rates, let's say some people trade high frequency, and let's say you trade at least every hour, right? Then your exposure is actually not too high. You probably don't care that much, because the exposure, the effect of the rates fluctuations on your overall P&L is probably not going to be very substantial. If you have a very long horizon, like for example, you're holding something for a couple of years, depends on the setup, depends on what you're actually looking for, you may or may not be interested. I think it's a more reasonable concern to have, but ultimately you can say, like, over 2 years' time, the rates have probably been reverting, and the funding, for example, funding rates have probably been reverting. But there are not a lot of people in crypto just yet who are doing trades with that type of the horizon, right? So typically what we're looking at right now, when we looked at, and we spoke to prospective clients on what terms are most interesting. So when we're talking about monthly and quarterly, for somebody who is doing some kind of mid-frequency trading, so let's say they're trading, I don't know, once a day, or they're trading a couple of times a week, or even rarer if they have a longer term view, typically that's where it kicks in, and that's where your funding can actually make or break a trade. And there are plenty of examples we have with some of our investors and people we're talking to in the market. If you're using perps for hedging, for example, and you happen to be long, then funding rate going from 10% to 40% overnight kind of purples your cost to hedge, which is, like, obviously you would rather not do certain things than take that kind of risk. So it's dependent on the strategies, and we're also learning together with our clients, and we're talking about how that best fits into their strategies, and producing some trading ideas, as you know, and seeing how they perform and how the market reacts to them.
Yeah, that's fantastic. That makes a lot of sense. And yeah, of course, if you're trading kind of small or high frequency trading, then your funding is not so much of a big deal from trade to trade. But something else that's interesting that you can provide is, in crypto, we have these crazy funding situations. For example, April 1st, right now it's June 12th, but April 1st, the Bitcoin fixed funding or futures basis was like 30% or something like that. And so I could short the basis, but I could also go on Rho and leverage up that trade where I'll pay the short-term funding for a couple days, but if I catch the right inflection point, I have a quarter of 30% annualized yield kind of coming in, getting good all at once. So there's kind of a great way to trade that.
There we go. That's basically the idea, right? So you're trading the rate synthetically without the risk of the underlying. You could potentially replicate similar payoffs by trading calendar. Essentially, you can trade like perp versus deliverable future. Liquidity is limited. You still might have some delta left, and there are things that it's basically not perfect, and it's also like 2 trades instead of 1, and it may or may not be capital efficient. When you do the same on Raw, as you said, you could have on April 1st, you could look at the current rate profile and you think that that thing is not going to stay there forever. If you're trading a monthly instrument with us right now on the beta, and it's not as crazy as it sounds, you can easily trade at the beginning of the month the instrument that expires at the end of the month at 100x leverage.
Yeah.
And to kind of give an idea why this is not crazy at 100x leverage, let's say at the 50x leverage, typically you would have a couple of days to react to a margin call if something goes wrong. So we actually published some blog posts on why 50x leverage and race is not crazy. And we actually artificially restricted the leverage on these markets for the initial beta. It can be even higher. So that's probably it's probably a more capital efficient way to do the same trade. And it's probably cheaper fee-wise. It's probably more capital efficient. And it's just cleaner.
Yeah, that's a great point, especially about the capital efficiency and like why you can do so much leverage. I mean, oftentimes you hear Warren Buffett say that derivatives are like these weapons of mass financial destruction, and there's $700 trillion of notional risk out there. But you're talking about $1 trillion, but you're talking about the payment on the interest rate of $1 trillion, not $1 trillion of like actual exposure.
There you go.
So
there you go.
So I see.
The notional of your trade is going to be $1 million, right? But really, if the trade is paying 5%, then your exposure is 5% of the $1 million. So the notional is not as crazy as it sounds.
Yeah, exactly. That's fascinating. And then one of the other things that's really interesting about Rho is like, in FTX, a lot of people like to do these basis trades. FTX had futures on everything listed right away. We could get like a new coin that just dropped and there would already be a future on it. And you trade the basis on that stuff. The problem there is that FTX went under. So Rho being a non-custodial, essentially, or smart contract custody DEX, does that transparency play in? Is that a value proposition of Rho to be able to?
For sure. That's the idea. And being decentralized or being on chain comes with its own complexities, right? So there is no shortage of use of the on-chain protocols getting hacked, and people are wary of that. We passed all the audits with some of the top auditors in the space, and we'll continue doing that and all that. But the perceptions are that on-chain is more complex and riskier, perhaps, than some of the off-chain setups. But at the same time, when you're a new exchange, I don't think anybody, correct me if you believe differently, but I don't think anybody's happy with proof of reserves or like any other way to estimate how solvent any exchange is. And being on chain gives people that degree of transparency, which is more important for us as the new venue, right? So you can actually, if you understand how to read the data on chain, and we're going to provide some additional dashboards for that on the rest, but right now you can already see basically the systemic risk in the entire system. You can see the amounts of collateral posted. You could derive the total exposure. You could see the number of positions that are close to going under, right? So you can actually, on the aggregate level, you can always have a very transparent picture of the systemic risk in the venue and where the collateral actually is. And what are we doing with the collateral, if any? We don't. But if we would, you would find out, right? So we feel that it's very powerful, and maybe eventually we hope a lot of venues will conclude the same. And instead of providing proof of reserves without proof of liabilities and all of the other things, you can basically continue trading off-chain eventually, but you can do your collateral and risk management on-chain, and that's just a cleaner and blockchain native way of doing the same thing.
Oh, that's fantastic. And then something else that's kind of interesting is, sometimes we track funding rates and basis rates here at Amber Data. Sometimes the funding between two different exchanges might be different. Is that something that happens often? Is that something that's an opportunity? And let's say that you showed me a trade which was really interesting, which was the relationship between OKEx and Binance. Can I use Rho Protocol to do some sort of trade there, pairs trade between the funding on different exchanges?
Actually, thanks for giving me the opportunity to talk about that one, because when we share that trade with you, we normally try to put our money where our mouth is, and I traded that. I basically had an account with 1,000 USDT, and I traded it last Thursday on the 6th of June, right? And I closed out the trade today with about 15% earnings.
Nice.
Pretty sweet, 15% in 6 days. So the trade was, and I'll talk about the reasons for that discrepancy. But basically, the trade is inversion, or more like mean reversion of the spread between Bitcoin funding on OKX and Binance. So the premise is basically Binance OKX typically on average has a spread, and that spread tends to dwell at around 2% positive. So Binance is typically 2% more expensive than OKX. And that spread is quite volatile, but that's the average across, I think, a year and a half, if you look like 18 months or since the end of 22. And recently that spread has basically inverted. And we saw OKX being 3% higher than Binance. And that has some structural reasons. But basically, the trade was, if you're right and that spread will continue exhibiting the same pattern, then it's going back to 2% positive at some point, and you can basically catch that 5% movement while staying sort of market neutral versus just absolute movements in Bitcoin funding. So if something structural happens, something systemic happens, and suddenly Bitcoin funding on average in all the exchanges goes up, then you being long one and short the other, you're hedging against that movement, or likewise if it goes down, and you're basically betting on the spread. And I basically ran that trade at about 100x leverage or 50x basically 100x leverage because it was 500 in one trade and 500 in the other trade and 50,000 notional each. And the spread actually did invert, and we're going to release a short note on that. And this morning it was at about 1.5% again when I closed it out. So in 6 days with that leverage, I basically made 15% net of all the fees. It's pretty sweet.
Yeah, that's fantastic.
I could have potentially done the same just with Binance and OKX, but I would probably have to do 4 trades instead of 2, and I would run other risks, right? So I would be actually trading a perp, so I will need more collateral and so on and so forth. I would still need collateral in 2 venues, so it's not optimal. It could be done, but I think Rho provides such an easy way to do that with a single product, trading perp funding on all those exchanges. And right now we have Bitcoin and Binance and OKX. There are more coming in, and we actually have some other ideas that we will announce soon. We're going to have composite rates and some of the other things that people can trade.
Oh, that's fantastic. Yeah, that's a very slick trade. So basically, if I was going to reproduce that just to understand the steps, so OKX funding is higher than Binance by 3%, which is abnormal because historically it's cheaper by 2%. So to put on the counter trade or the mean reversion trade, I short the OKX perp. I buy the basis to do the I buy the basis, so I get I pay the fixed, I earn the floating, and then on Binance I do the opposite where I get long the perp and short the future. So then I short the fixed, get paid or pay the floating. And so then those 4 legs together in relation to each other create the trade. Is that right?
So if there was no Rho, that would be the way to do it, yes, right? Okay. With us, it's as simple as, and that is one way of replicating the same payoff, right? But with us, you basically come to us, you short OKX, you long Binance, you have it on like single dashboard, you see your absolute P&L, you see how both rates move. When you like the spread, you unwind it. Easy.
Beautiful. So you get to trade the whole package and have a central, like one collateral place. Because if I do it between the 2 exchanges, like Binance doesn't care that I have money on OKX. There's no collateral relief there. So with Rho, I can put the whole package on in one place using my whole collateral, which allows me to access to the leverage. And then
there you go.
Is there ever a difference between where the market is being priced on Rho versus where it would be on the underlying exchange?
So, first of all, yes. And there are 2 things which are important to understand, right? So our market is entirely independent, and you're basically pricing the market. And if there is an arbitrage with what's going on the exchange, somebody will basically take advantage of the arbitrage and the rates will collapse. But yes, the discrepancies are possible, which is also an opportunity. I was talking before, right, about the potential inefficiencies that can be harvested. And that's one of the reasons I think why, one of the reasons why this is, I believe, is interesting to early traders and early liquidity providers. Now, another thing which is important to understand is that our rate is never exactly the floating rate that you see on the exchange, right? Because the floating rate on the exchange, the way to look at it is basically a spot. It's the current rate at this particular point in time for this like next 8 hours. Our rate basically is a representation of the forecasted rate from now until maturity, right? So if the maturity is right now, we're on 12th of June, and the maturity is at the end of June, then our rate is going to be the market expectation of the floating between now until maturity on average. And so it normally would be a little bit higher or a little lower than the floating rate. So it's never exactly the thing. So for us, the raw rate and the floating rate are the two legs of the fixed per floating swap. So the rate of the exchange is our float and our rate is our fixed.
That makes a lot of sense. And then that's a great point about, so essentially the market maker is the one who would stand in between the markets that they're offering on Rho and potentially replicating the sort of the legs of the trade on the exchanges themselves to essentially provide that market. That's very interesting. So how about, so we've talked about discrepancies between exchanges, OKX and Binance for say Bitcoin or Ethereum or whatever. Now, is there ever discrepancies between Bitcoin funding and Ethereum funding, or Ethereum funding and some altcoin funding? Is there trading opportunities there in the rates market?
I would think so, but it's a little bit more complex to model. And we looked at both. So we actually, I kind of mentioned briefly the composite rate, right? So if you look at the funding between Binance, OKX, and Bybit for the same underlying, for example, for Bitcoin, they're not the same, but they're typically quite highly correlated. And the correlation coefficients we saw are like 85%. So if you look at creating a composite rate out of them, it can be like a single product, which is quite useful for anyone who wants to trade perps on large exchanges in general. Now, there are others like, I don't know, Derivs, for example, their rates are a little bit out of whack, and also their perps are inverted. And it's a very different animal. So it would be difficult to put them into the same bucket, and it might be harder to derive a strategy that would trade, for example, rates on Binance versus rates on Derivs. While Binance versus OKX is clear, even though they're pricing them a little bit differently. Clearly the mechanics of the rate is slightly different, but it could be done. Now, between the currencies, the correlation is a little bit less significant, especially if you're looking, but it still exists, obviously, right? Because normally the perp funding rate is a function of the market sentiment in a way, right? At least to a significant degree. So when perps are soaring on Binance, you could expect the same to happen on OKX. And when perps are soaring on Bitcoin as an underlying, you would probably expect to see the same on Ethereum, maybe to a different degree, but still. The correlations we saw there last time we looked at it were more like 60, 70%, but they still exist. And it's a less trivial strategy. I'm sure something can be done there, and I'm fairly certain some people are already doing that. And if potentially do it with our market, but I do not have a ready trading idea to present to you how to do it today, basically.
Cool. Yeah, that's very interesting. I would think there's some sort of opportunity in a coin that has a staking yield. I kind of view that as a dividend, and one that doesn't have a staking yield from traditional finance that would play in. But it seems like in crypto, people are not looking at that yet. So it would be very interesting to see how people would trade that on Rho.
It's starting though, and it's interesting. Like I use exactly the same analogy. I think staking is basically your dividend for a long-term holder, right? But the interesting difference is your dividends on, I don't know, Apple stock are not paid in Apple stock, right? They're paid in US dollars. And your dividend, stake and reward in crypto for Ethereum is paid in Ethereum. And some people like it, some people don't. So we have a fair number of clients who say, I don't know, I'm staking my Ethereum on one of the perp dexes because they're paying me my staking rewards in USDC, and I like it. And you could kind of do the same with, for example, with a fixed staking yield in a way. We can fix it in the underlying and the native currency. We can also create a product that would fix it in stable coins and in USD equivalent. There are plenty of things can be done there as long as the yield is a little bit more predictable, which we can provide.
Yeah, that's very interesting. So, kind of wrapping up here, if someone wants to learn more about Rho Protocol, where do they go? You mentioned there's a beta launch going on right now. How can people get more information there? And then lastly, we'll end with some more kind of personal fun questions at the end here.
Sure thing. So we have launched a private beta to the first 100 users. Few spots still remain, but increasingly less so. But if anybody is interested, you can go to Rho.trading. That's our landing page. You can join our community on Discord. The links are also on the landing page. You can go on Twitter. We are Rho_XYZ. Or you can ping me directly. I'm Alex Ryvkin. I'm predominant on most of the social media, so it's relatively easy to find me and ping me directly, and I will sort you out. If you want to know more, there are a couple of videos we recorded on the platform. You can actually check out the platform itself. So for you to be able to trade, you need to be whitelisted. But if somebody's interested just to see the product, just go to the landing, click go to app, and you can see how it works. And read our documentation. We're going to release a lot more content, a little bit more educational and instructional on how to use the product and how to benefit from it. That trade that we were talking about, I actually recorded the video kind of before and after the video, and we're going to publish it with some explanations and the charts so people can see which opportunities are there in rates trading and how we can facilitate them.
Oh, that's fantastic. And Rho, that's RHO.trading, correct?
Exactly.
Perfect.
Thank you.
So kind of wrapping up here, one of the questions that we like to ask is, what do you like to do for fun outside of work? And do you have any good trading books you recommend listeners?
So for fun outside of work, when you get some time outside of work, it's predominantly just trying to stay active, to stay alive in the entrepreneurial life. Training martial arts for a while. Been the thing that kept me alive. I found that a little bit later in life, but
nice.
I cannot recommend it enough. That basically keeps you sane and grounded most of the time. On the trading book side, I was thinking about it, before our conversation, and there are not many books specifically on trading that I found particularly influential. Obviously, you can go through, all the standards. I have like fixed income securities on that semi-empty shelf out there, which is one of the foundational books. I went through all the bells and whistles with Market Wizards and all the popular books early in my career. I think more than actually trading books, the actual hands-on experience. I got into finance not through your standard kind of analyst associate after the university. I joined the desk as a very junior, knowing not much about the markets, and I mainly learned everything I know about finance from hands-on experience and qualification exams, but predominantly just reading a lot of market information, research, and things that smart people say, and typically just find a couple of smart folks that you like and you trust and who are definitely smarter than you. There are no shortage of them for me, and just follow them and read everything they publish. That helped me a lot.
Fantastic. Well, Alex, thank you so much, and congratulations on the launch. I'm very excited to see where Rho develops into, and
thank you, sir.
All the trading that goes on. Thank you, everyone.
Thanks, Greg. Thanks for having me.
Absolutely.